Welcome back to Wearable Takeover, where we introduce wearable technology, our ecosystem, and the people that support it. I am your host, Coach L, also known as Lakeisha Greenwade, and today we are going to talk about what everybody wants: money. Money. And we're going to talk about how to account for that money and processes and things that our founders and aspiring founders should pay attention to. And I'm so excited that we have the expert here with us today. And I met this expert, I believe it was in California, at a Black Enterprise event. And at that time, we were just bosom buddies, made a partnership. We're going to help each other along this journey. But I am pleased to introduce Eric McKenney. Eric McKenney is the president of Simplified Management Products, an accounting and consulting firm headquartered in Montgomery, Alabama, with a satellite office in Atlanta, Georgia. And folks, let me tell you, Eric is somebody that you want to know. He's that silent partner, but that powerful partner that is there and that's supportive. And this is why we wanted to make sure our ecosystem knew who he was. Now, you might have heard of a famous entertainer who made waves with some of his investments in tech. Well, let me just tell you that Eric was on that team that was supporting that particular entertainer. So when he founded his accounting and consulting business in 2010, he also worked with the venture capital fund Queensbridge Venture Partners as an accountant and consultant from 2014 through 2016. He currently is working on a venture capital fund, Cunningham Capital, in the same capacity since 2020. And he's been working with startups and other VCs for the past 10 years overall. He is the author of Handle Your Biz, the Entrepreneur's Guide to Setting Up Your LLC, partnership, or corporation. And in 2020, during COVID, he self-published that, and he's currently developing tax software scheduled for pre-launch in February of 2023. So, folks, let's give it up for Eric McKenney. Give it up, give it up, give it up, give it up. We have the master. We have the guru. Eric, this is tax. So tell our folks, how are you and other accountants doing right now?
We're busy. Tax season kicked off yesterday. So like we were talking about before, been really busy with that from the start. And I'm hoping that it continues throughout the rest of the tax season. So yeah, it's busy right now.
So this is why it's so important that we have Eric here right now. Number one, it's truly an honor that he was able to carve out some time for us, because I know many accountants, and especially those that deal with the breadth of work that Eric does. He's creme de la creme, okay? All right? He's working with a lot of the top features, a lot of the top businesses, and he's pretty humble. So I'm going to try to pull some of these things out of him during this particular episode. But you know what? I got to take it back. Eric, you're from the Midwest.
Yes.
Michigan, to be exact. Sorry, you're from Michigan. You know, I'm from Ohio. But so tell us about let's talk about your journey before we get into the nuggets here and the nuts and bolts as it relates to, accounting, finance, and what our startups should be doing to prepare for tax season. But tell us about your journey of getting to the Eric of today. How did you get started?
Wow. I actually started in a whole different field, a whole different space. I worked in automotive as an engineer, and I decided that I wanted to go in a different direction. So I started taking classes at my HBCU, Alabama State University.
Okay.
Got my undergraduate degree in accounting, international business, and then I went and got my master's degree in accounting as well. So founded Simplified Management Products while I was in undergrad, and we started meeting people, networking, and here we are today.
I love it. So, Eric, not only are you a premier man, in this particular industry, you've worked with a number of major sports entities, a number of major VCs. And so I'll give you liberty to name drop if you feel the need to. But folks, let me tell you, he is the real deal. As a result, Eric actually introduced me to one of my VC mentors who is just changing the game for many investors, for many athletes and entertainers, and for many startup companies. And you can find him on most of the major news stations. But Eric, what's so interesting is that you are a model of some of the things and with some of the capabilities and competencies that we're going to see in this ecosystem, because we are the ecosystem that takes people from where they are and give them that space to transition into a founder or into other tech talent that's going to support the startups within the wearable tech ecosystem. And thank you for being a champion of wearable tech ventures. Thank you for being an example of what success looks like. And thank you for being an entrepreneur that is building these platforms and software and these consultations, but also building it with community at heart. And that says a lot, folks, because we at this ecosystem, we believe in relationships and we believe in giving back. And Eric has done that consistently. Even though he has worked at the top of his game, he has always made sure to make time for us along this journey. And for that, I wanted to make sure I extend my gratitude to all of our listeners so that they know the real man behind the business that is helping our startups so that they are doing the right thing, doing the right thing.
Yeah, absolutely. Thank you. I appreciate those kind words. And I want to say I appreciate you allowing me to be a part of Wearable Tech Ventures and to help as much as I can. So, yeah.
I love it. And so, folks, if you're listening, you definitely want to take notes. You definitely want to take down Eric's contact information because he's somebody that we're saying you want to go to him. You could trust him. And Eric, let me just tell you, one of my worst subjects, and I'm happy to say this, right? I like to stick with what I do well. Accounting is not what I do well. Throughout all of my formal business school, and folks, I even taught business school, accounting was not my thing. So I'm so excited that we have Eric who loves this stuff. And you know what? That's a big deal to go and get a master's in accounting. Like, you're not just out here saying, oh, I do taxes on the side. No, like, you really went through the curriculum and whatnot. And so what do you see changing for the field of accounting in particular? And then also, what do you see changing as it relates to the field of accounting as it relates to interacting with startups?
Well, I think that right now, if you would to do some research, you will find that accountants are kind of limited right now. They're having trouble trying to get people to actually go into the field, probably because it's such a strenuous curriculum, as you've attested to. And so, yeah, so I see it coming back around though, because whenever there's a void, people are going to jump in and fill that void. So I see it coming back around soon enough. But, for now, I'll kind of fill in the holes where people are needed and I can be reached at any time. So,
I
yeah.
love it. I love it. And thank you for being that example. And you're absolutely right. So for those of you that might be saying, hey, I may not be in tech, but I want to support the ecosystem, go to Eric. We'll have Eric vet you. We give you that stamp of approval to work with our founders, because what we're building here is incredibly important. We're generating a generational wealth. We're making sure that our startups are bar none in the industry. And so let's talk about the foundation. So it's tax season. Eric, how should our startup founders prepare for tax preparation?
Wow. I think first of all, it starts with setting up your business infrastructure properly. To do so, I think you need to file articles of formation if you plan on filing an LLC, articles of incorporation if you are incorporating, and those documents need to be filed with the state in which you are choosing to establish your business in. I think next you're going to need a set of bylaws, which those bylaws are the rules and conduct for operation of the company. All agents, members, shareholders must follow those. Another thing you're going to need for founders specifically is cap tables. I'm sure you're probably familiar with those. Cap tables show company assets and securities, and they show the percentage of ownership of each investment that the investors have invested in and what that percentage of ownership is. This is important because if a founder decides to exit at any stage, then their share of ownership at the time is easily determined, and so is their compensation. So one of the last documents that is going to be needed is going to be annual meeting minutes. You definitely have to keep your minute meeting every year in order to document any important decisions that were made throughout the year. The documents should be kept in a company database and should be easily accessible if needed to review or update it.
Okay, folks, this is real work. Okay, so for some of you, you might be saying, oh, I have this great idea and I can't wait to get started. Let me start on the product. No, let's go back to the foundation. And Eric, you provided 4 key tools and 4 key instructions that are incredibly useful. And I can tell you that when we started here at Wearable Tech Ventures, before we were not a 501c, then we transitioned to a 501c3. But even doing the bylaws, that was like, it was somewhat overwhelming, to try to get that together, and then also keeping track of all those records. And for those of you that may be more on the artsy side, or you might be, like a content creator or whatnot, this might be a challenge for you. But there are tools that are available that you can incorporate to make sure that you have these documents in place. There are some AI tools, note-taking tools, believe it or not, that are incredibly helpful as well, so that you have everything that you need. So one of the other important things you mentioned there was that of cap tables. And so for those of you that may be hearing that term for the first time, or if you're a founder that's just saying, hey, I'm just really trying to develop my product. I know I want investment, but I'm not exactly sure how to go about this whole cap table thing. There is a course that we can recommend to you if you email us, and we'll send that to you as well. But what are some other tips that you can provide when establishing that initial cap table, Eric?
Well, you're typically you can use an Excel spreadsheet to create the cap table. The information that you're going to need is going to be all of the information related to the investors, their name, address, their social security number, or the EIN if they decide to come in as a business. You're going to have the percentages of ownership, as I stated before, and basically that's what it's comprised of.
So it's very simple. So it's not something where, folks have to go out and purchase a software for a cap table. They could do it using Excel, what they might have on their computer right now.
Yes.
That's important. That's something we want to share. So folks, don't overcomplicate it. Take your time, give yourself time, and establish a deadline as to when you want to get these things done. And one of the other things, you were talking about designating a state for operation. There are many startups that choose Delaware as their state of incorporation. Can you give us some history as to why that may have been a preferred choice, especially when we think about, Silicon Valley and many of them having, their operation out of Delaware? What are some advantages to that, and why might a startup choose Delaware over their physical home state?
First, Delaware doesn't have state tax. So, and I think one of the most important things is Delaware has a history of, when it comes to legal issues, of siding with corporations. So most people determine, that Delaware it's more corporation friendly. So that's why most people or companies decide to go ahead and incorporate in Delaware. It can be kind of tricky though, because you can end up paying some high not business taxes, but the taxes in order to have your company organized in Delaware every year that you have to pay. That can be kind of high. So what I'd recommend is whatever state you're in, just incorporate in that state, because if you do incorporate in Delaware, you're going to have to incorporate in the state in which you do business, and then you'll be considered a foreign entity in that state, and then you'll be paying that business privilege tax in both places.
Oh,
So, to start with, you want to just choose one. And if you decide down the line that Delaware may be a better place, you can always, move it over to Delaware.
well, Eric, you just answered one of my questions because I had businesses in the past that I've set up in Maryland and in Delaware, and I would notice that there were these fees that were coming from Delaware, and I didn't understand it. And I was like, resistant, what is that? No, I'm not paying it. But thank you for
Yeah.
demystifying that process and helping us to understand what that actually means and what it looks like. All right. So you kind of touched on this. You said, when preparing these documents, it's important that founders identify their, in a sense, their exit strategy. Because I know being a mentor for Techstars, as well as being a mentor for NASDAQ and many other entrepreneurial ecosystems, even in Wearable Tech Ventures, one of the questions we often ask founders is, what is your exit strategy? And you basically provided a cheat sheet for founders so that they can think about that and put some of that in writing, but they can also, shift that answer as to what that's going to look like. So can you reiterate any key verbiage and or documents that founders should have in place as it relates to, number one, ownership? And then how does that, again, can you give us a better picture or an example of how that applies to tax preparation if founders are exiting the business at different stages? So again, the document as it relates to overall ownership and then a different stage exit, if that happens to happen, because we want our founders to be prepared for the worst and best case scenarios.
So those initial documents that I talked about, the articles of formation and the articles of incorporation, those documents are basically going to illustrate who the shareholders are, different percentages of ownership, etc. The bylaws and sometimes the operating agreement is going to speak on everything that goes on in the business, how it's going to be run, including an exit strategy. So if things don't work out, this is how we're going to start dissolving the company. This is who's going to get their share of the money first. Creditors, typically there's kind of a pecking order for it, but the bylaws and the operating agreement should state all of that.
Okay, and that's really good. And I think that for any advisor coming in or potential mentor or advisor, if they're looking at a startup or if a startup is looking for an advisor, these are documents that you want to ask that startup, do they have in place? And it might be encouraging to say, before we come to the table, why don't you get that in place so that we know how we're going to play, right? And when we talk about our underrepresented founder group, I really, honestly, Eric, I've been in a lot of programs. I've been in a lot of startup programs. I've been in a lot of accelerator, incubator programs. And I don't think anyone has introduced this advice as plainly as you have done today. And that's why I say Eric is a gem. He is saving you time. He is saving you money if you just listen and apply the advice that he is giving you right now. So kudos. And that's why it's so important we have people like this in our ecosystem. So, okay, so let's talk about investors. Let's shift a little bit, right? Let's fast forward. So let's say a startup has their documents and they have already, started to build their model. Perhaps they have, they're getting some traction. They have their model out there in the marketplace, and they get some investors. How does having investors impact a startup's taxes, if at all?
So, we want to talk about taxes. As founders, we typically seek capital to fund our startups and help develop our ideas and products. So in doing so, most of the time we look to VC firms or we establish our own funds to raise money. So we must understand that when you take on investors, in most cases, you're taking on a partnership. You're forming a partnership. Each investor in the fund is considered a partner for federal tax purposes. So when partnerships are formed, the Internal Revenue Service requires that Form 1065, which is a partnership return, be filed to report each partner's investment and gains or losses. So when you compile Form 1065, it produces another form that must be distributed to each investor, and that form is called a K1. That K1 is used by the investor to report those gains or losses when they file their 1040, their individual tax return, or when they file the corporate tax return if they came in as a corporation. So this is important for the actual founder of the fund, because that person is the person responsible for making sure that both the 1065 gets filed and for making sure that the K1s get distributed to the investors. If this isn't done, you could potentially be on the hook for any tax liabilities on any gains and for any penalties for not meeting the IRS tax filing requirements. So, yeah.
You know, all this stuff is scary to me. I'm just going to be real with you. That's why it's just awesome to have Eric as a partner, because sometimes it's like, what? And I know that's how some people may feel when we talk about tech and some of these things, and you know, how some of these things work. And that's why Eric and his firm are so important. He just broke it down and he told you the types of forms that you need. And so, folks, I specifically recommend startups, do not do this on your own. Do not do this on your own. It can be a little bit more complicated than what you think. Okay. So it's not like, you know, some people that may have few income streams and they may be filing their taxes online and think they're good. No, you need an advisor. You need someone at the table to make sure that you are doing this correctly. All right. So Eric, let me ask a little something like this too. So do you recommend that startups, let's say they're working with you, do you recommend that they have an attorney as well? And how does that work? Or are there different stages where they work with you and or an attorney to ensure financial health of their startup?
Well, I think if you have an idea and you are planning on filing patents and things of that nature, you definitely want to have an attorney's assistance with that, or a patent attorney specifically. Other than that, I think one of the most important people that you need to have on your team from the beginning is an accountant. Not just saying that because I'm an accountant, but there's many reasons why. And you need to have an accountant on your team throughout the life cycle of the company to assist with financial record keeping. Like we talked about earlier, tracking the investors. The accountant will know how to actually document these things based on accounting principles and prepare your financial statements to be used to prepare your tax return at the end of the year. So, and another reason why an accountant is so important is that the IRS requires that financial records be kept for tax purposes. Every business in the United States should be doing this, though there may be a lot of us that don't. Because in the beginning, you just want to get out there and do business, and you want to get your idea out there and let people see it. But you need to be keeping track of all the money that you're spending and any money that you bring in. And so the Internal Revenue Service doesn't really require a specific method for keeping track of these activities. But I personally would suggest using a platform like QuickBooks Online. It's a cloud platform and it's easily accessible. It's easy to use, and it's available for founders to access at any time, as well as the accountants. So,
what was that resource again, Eric?
It's QuickBooks Online. It's an accounting platform that's in the cloud. Now they have desktop versions as well, but the cloud version makes it easy to access from anywhere at any time. You can access it from your mobile device. And you can also share that login access with your accountant. So you guys can work in the program at the same time. He can train you and show you different things, because accounting is more than just numbers. It's really principles on how things should be documented. So, other than that, it's just simple addition and subtraction, a little bit of multiplication and division. It's nothing complicated that part, but the principles on how things should be documented, that's where it gets kind of complicated.
I love that this is so simple to you, and that's why you are the person who needs to be on these teams to make it simple for everybody else. Other folks might be like, I don't know. But you know what? You said something important, that one of the most important people on your team is your accountant. And
Absolutely.
So Eric is a resource that we have internally at Wearable Tech Ventures, somebody that we truly trust, someone that has been on our team since the very beginning. So for our startup founders, we highly recommend that you contact Eric and get a consultation. And then also, if you are a member of our ecosystem, how do you become a member? Basically, you just tell us who you are. When you go to wearabletechventures.org, go to the bottom of our page and tell us who you are. We actually have resources available and discounts available with some of the resources like QuickBooks and whatnot to help you build your business and to keep everything in play. So it's incredibly important. If you have not already done so and you're listening to this episode, stop right now, go to our website, register for our ecosystem so that as we send out those discounts and other resources to help you on the back end, you will be in play and you will be prepared for your conversation with Eric. So Eric, we are a global ecosystem, and currently we have representation in 4 continents, and we have founders coast to coast in the United States. Are there any stipulations for any of our founders working with you, considering your geographic location in the South?
No, not at all. Accountants can work with you no matter what state you're in. If you're out of the country, if they have that amount of knowledge, they can work with you. So no, there's no restrictions on that at all. As well, that goes for tax filings. If your accountant is filing your tax returns like I do, it doesn't matter what state you're in. I'm able to file your tax return because it's actually a federal tax return that we're filing. And then it also, the software that we use comes with a state return as well. So every state in the United States, we have access to the state return. So not only are we filing your federal returns, but we're filing with the state if the state return is required.
I love it. So folks, regardless of where you are in the US, you can work with Eric. And then also we have startups that are moving from other countries to the US. Currently we have that. We know of at least 2 founders that are moving to the US. And then we also have founders that are coming to visit in the US, and they're looking for spaces and things to do. So it's incredibly important that even if you are transitioning from another country and coming to the US, that you still consult with Eric, because there's things that you might be doing here in the US that have to be accounted for. And so that's the beauty of having Eric and his company in our ecosystem so that you have that one-stop shop. All right, so Eric, getting into that, outside of tax season, what should startups do to account for their finances and their cash flow? Are there, I know you mentioned QuickBooks, and so we might have some resources and discount coupons that our ecosystem can partake in. But are there any other particular systems and people that they should be in contact with, and for how long they should be in contact with those folks? So outside of tax season, what should they be doing?
So again, basically your accountant is your go-to guy. Typically, I know my company has relationships with different banks across the nation, and you definitely will need a banker because your business is going to need a bank account. And your accountant is going to use the connection between that bank account and the software program like QuickBooks in order to receive all of your information so that your information can be classified and put in a format to produce your tax returns with. So
that's really good. And we, if you go to our webpage, we have some insight from some bankers from 2 major institutions that are recorded. And we recorded this when we first started the whole Wearables 101 workshop series, folks. So you could listen to some of those tips from those bankers. and just take that as advice from that particular conversation. I would like to say that Wearable Tech Ventures is not promoting any one particular bank as of right now. However, we are open to those relationships so that our entire ecosystem can be supported by that one particular bank. So if you hear me, bankers, make sure you go to our website, sign up for that sponsorship form. But that was incredibly important, Eric. So you said every startup needs to have a business bank account. And so you want to make sure that you're talking to those banks, understanding what are the fees associated with that bank account? What are some of those benefits associated with that bank account? What is the minimum deposit that you need for that bank account? Am I missing anything, Eric?
No, but you may actually have to use those banks to get funding for your company. So you want to build relationships with those banks after you, of course, understand all the rules for banking there, and you want to build those relationships up. So if you need to use them for funding, you can.
I love it. So there's a system that we use unashamedly at my church, and basically we instituted a process where every 15th of the month we do uh, budget, and we review the budget. We assess what we've done over the past month with our finances or whatnot, and we put that on our calendar. I'm sharing that as an example of perhaps something that our startups and our ecosystem partners can put in play. Um, do you have any suggestions as to a schedule or certain things that startup founders should be doing every month to ensure the health of the business and to make sure that they're ready for you?
Absolutely. You should be reconciling your financial statements with your bank statements. You should be reviewing them with your accountant at least quarterly. That way you're able to get a clear picture of how well your business is doing. And, you're always informed and you're able to make good management decisions with that regard. But without that information, you won't be able to, you won't know the health of your business. And that's something that's important for you to know at all times.
Okay, so that's important. So I heard you say a quarterly review. So, founders, do you have a quarterly review currently in your 2023 and beyond calendar? If not, you need to establish that right now. So start with that quarterly review, work your way backwards, right? And if you want to use that model of, the 15th or whatever, that you carve out that time on that specific date of every month to provide maybe a couple of hours, maybe 1 to 2 hours where you're looking at your finances and making sure everything's in alignment. It's very, very important. The the challenges associated with starting a business, a tech startup, etc. We understand it's a lot. In many cases, when you're starting out, you're doing everything, but this is the foundation, and this is one of the most important pieces. And if you know you don't do this well, if you know you are not that organized, you need to make sure you're in contact with Eric to set up that schedule and to build that relationship. Because we're not asking you to continue to do something that you don't necessarily do well. What we're asking you to do is to put a system and some basic principles in place so that when Eric comes in, he can help you and make sure you're operating according to standards. And also, it's incredibly important because if you talk about you want money and if you want investors, you want to make sure your house is clean. You have to make sure your house is clean. And so, Eric, I want to have you share whatever you can, um, because you've been involved in a lot of deals. You've been involved in a lot of deals, from small businesses to VC deals to like major. I'm trying to be careful with what I'm saying here to protect privacy and everything that you do, but many multinational global type organizations, right? They have that impact. You've seen a lot of things. So let's talk about if you can give us a hypothetical example of the best case scenario of, let's say, a team like yourself and maybe some other BC partners coming in to assess a business. What does that flow? What does that really look like? And if I need to explain that a little bit better, please let me know. But ultimately, what I'm trying to do here is to give our listeners and those that may be watching us later on YouTube an example of the ideal situation of what it looks like, maybe in stage 1, stage 2, stage 3, meeting 1, meeting 2, meeting 3, of bringing in folks like yourself to assess the business and determine if they're worthy of investment. What's the ideal situation? What should that look like?
Well, ideally, it should look like having all of the things in place that we talked about, having all of the documents from the very beginning, the structure. We're going to want to look at, how the business is structured. Want to look at the shareholders who are a part of it, any members that are a part of it, what's their background. Then we're going to go into looking again at those financial statements. We want to see the numbers. We want to see exactly how well the business is doing or how not so well the business is doing. And we want to see what that basically will tell us when we look at things like the profit and loss statement, the cash flow statement, and the balance sheet. Is going to tell us, the history of the company so far and the potential of the company going forward. So yeah, in the ideal situation, if you have all of the things in place that we've talked about, we're probably going to want to take a peek at your cap tables to see, your investment information, to see how many investors are involved already. If you have all of that stuff in place, then that's the ideal situation for trying to woo other investors.
You know what? Thank you, Eric. And one of the first things you mentioned, and if I could just simplify it here, was team. Who is on your team? I get asked that a lot. And so for those of you that may be starting, you may be saying, I don't have a team. I don't want you to get discouraged. I know personally what it's like when you are building from scratch and building yourself up as a leader so that you can attract your team. But if you do the work and if you apply the principles that Eric has mentioned, you will get the right people on your team. And the beautiful thing is, by coming into the Wearable Tech ecosystem, we're here. We're part of your team. And there are other players that we can bring there. So that's incredibly important. And you want to have someone like Eric on your team. You do.
Absolutely. And someone like you.
Thank you. You
Being
want
part of the wearable tech ecosystem, I mean, it has its advantages. So, you definitely want to be a team, and that's why I'm thankful to be a part of it.
Absolutely. You know what? If I could play a song right now, go to my DJ mode, Eric, I would play that song. Who you with? You want to be with us. You want to be with us. And
yes.
So we have so many resources and so many people, so many companies, and we're bringing more companies to the table, more corporate partners that are invested and interested in your overall success. So, okay, team. Then the other thing you said was you got to look at those numbers. You got to look at those numbers. And folks, you're not going to get away from it. And the conversations get real. I can tell you that along the life cycle, and when I say life cycle, I'm referring to if you get that opportunity where you're positioned for growth and you can present your business model to investors, okay? The conversations with those investors, they can be lengthy. And you could be talking to multiple investors. And so with that being said, there's going to be a lot of data shared. So Eric, are there any tips that you could provide for our founders as they are shopping around for investors? How much information they should share and how can they protect themselves in that process?
Well, I think one of the first things you should do is always have an NDA and have that signed off for anyone that you share private information with or your corporate information with. Once you get that out of the way, you can pretty much open up everything that is required. I don't think there's too many things that you cannot allow a potential investor to see, unless you just decide you don't want to let them see that. But as long as you have that NDA in place, then you're fine to open up.
Absolutely. And that's one of the things that we do here at Wearable Tech Ventures. All of our partners, all of our advisors, and even all of our founder ambassadors, in order for them to come in, they have to sign an NDA. Okay. And so some of you founders, you may be saying, I'm not a founder ambassador yet. If you choose to move to that realm of a founder ambassador, you must sign an NDA in order to play in our ecosystem. And I say play loosely, but it's for your protection. And we are different in our setup where we truly have the founder interest, right? So for those of you that may be saying, hey, I haven't got my NDA yet, or I need to establish that, we encourage you to curate your NDA as you are out there working and getting those things together. And you may not even be using it yet, but you want to make sure that you at least have that baseline document, right? So these are baseline things that you want to have in place. But the other thing I would encourage you to do is, if you have someone that is interested in investing in your company, ask them why, right? Because too often there are many organizations and there are many funds that are saying, hey, we want to invest in a startup. And if you've listened to our other episodes, we explain the various stages of investment, okay? But for those of you that might even be at that later stage angel or maybe at that VC stage, I think that's an important question to ask, because you're basically inviting this person into your home. And you do not want to have someone in your home that's going to tear it up or that's not going to respect it. And so all money is not good money. Let me repeat that. All money is not good money. So you want to be discerning as far as who it is you are bringing into your organization. Yes, you might need growth. Yes, you might really think that you're desperate, but ultimately you are not. Okay. So I
Yes,
think that's
Lakeisha.
critically important.
Yes, and I think it goes both ways. When you're out here wooing investors to invest in your company, you need to do your homework on those investors as well, and
Yes.
know who they are and what they're about before you actually invite them in to your house, as you say.
Absolutely. And every advisor or every person that claims to be an advisor is not a good advisor. Every mentor is not a good mentor. And so one of the things that we do here is we assess. We invite folks to the table, but we also assess and we validate those persons that might be able to add value in the future to our startups. Because again, this is not just a Lakeisha thing. This is not just an Eric thing. You need a team. And so I encourage our startup founders, if you are adding mentors and advisors to your team, ask for recommendations from the folks that those mentors or advisors have actually worked with in the past. Please don't take it blindly. Please don't think that you don't have that liberty to ask, because you do. You do. And every person may not have your best interest in mind. And so you want to make sure that you're asking good questions, but make sure that you are coming to the table prepared. Make sure you are tight. That's ultimately what we're trying to say. Isn't that, Eric? Just come to the
Absolutely,
table.
absolutely. Yeah,
And if you're not tight right now, all you have to do is
work on it.
follow the instructions. You know what?
Hmm.
It's so funny. I was telling some of our founder ambassadors, I said, please don't make me repeat myself. Please don't make me repeat myself. So if you are a person that needs repetition, this is why we have the Wearable Takeover podcast. You could easily go back, rewind, and listen, or fast forward to the section that you need to get to. Okay, so Eric, what questions should startup advisors, should startup investors ask to ensure the health of the business? What are so we're flipping the tables a little bit, moving from the founder over to the investor, the advisor. What are some good questions for them?
Hmm. If I'm an investor, again, I want to know who's on your team. Uh, I want to know how well you've done so far, what stage you're at in the life cycle of your business. I want to look at those financial statements again, maybe some tax returns, so I can kind of match them up to make sure that the information that I'm getting is correct. And so, yeah, those are the type of things that I'm going to be looking for as an investor if I'm thinking about investing in your company. And as
So
an advisor, I'm going to inform you or advise you that these are the things that you need to have buttoned up tight so that those investors will take you seriously.
absolutely. So tighten up. Tighten up, basically, is what we're saying. One thing we didn't touch on, we talked about investors, but do
Mhm.
some of the rules that you've already talked about, Eric, especially with documenting payments or whatnot, does that apply to advisory payments as well?
It does. Advisors are going to be treated typically as any other business expense, or they'll be treated as a contractor. So, depending on how they have their company structured, you may or may not have to provide them with a tax document at the end of the year. If you do, it's most likely going to be a 1099 NEC, which stands for non employee compensation. And so that's how advisors will be looked at with regard to uh, documents that you have to issue to them.
Thank you for sharing that, because I wanted to highlight the notion of advisors that are truly gifting their time versus advisors that you bring on board. And so both are necessary. So
Mm-hmm.
with our startups and our founders and aspirational founders, it's important that you're within our ecosystem because you're getting a lot of knowledge, you're getting a lot of advice, you're getting a lot of mentorship from our team right now for free. Okay. And there are other startups, there are other companies that actually have to sign advisory agreements for this type of information. But we understand who we're working with and we want you to win. With that being said, there is going to be a time where you need more intimate advice, more intimate guidance. And so at that time, you're going to have to institute an advisory agreement at some point, okay? So
Mm-hmm.
we've got some programs in play. We've got our other mentorship program that will be announced. So you want to make sure you are tuned into our website, that you're signed up so that you get that announcement, so that you have the extra level of support. But then after that, you will have to institute some advisory agreements. And so you want to make sure that you are accounting for all of these things, right? So you're accounting for your basic business costs. You want to make sure that number one investment that you make is going to be checking with the accountant, because they're going to help. Eric is going to keep you safe. He's
Yes,
going to keep you
absolutely.
safe. He's going to keep you tight. You're going to have that reoccurring meeting. But Eric knows people. Okay, so he's not like, oh, this is my cousin over here. He do taxes. No, Eric knows people. Eric has been proven with a number of the venture firms and things that he's been working with. Okay, so he's a valuable person. You always want somebody on your team that is going to be willing to give you that advice, is going to be willing to help, and also that will provide some introductions when necessary. Because
Right.
in order to be successful, you need people. You need people, and you need good people. And so I'm telling you that everybody that is coming on this podcast, that especially that I know, they're good people. We've been at this thing for a while. This is not an overnight type of venture. This is not an overnight type of success. These folks have been seasoned and tested. And so I'm saying this, that I trust Eric. And in the event that anything happens, you want to make sure that you have some agreements, um, some expectations in place. And so I highly recommend that you put those in play as well. So when you're going to Eric, or if you're working with an attorney or whatnot, make sure you have an agreement in place as to what it is that you're expecting and what is that timeline and
Mm-hmm.
what are those terms for flexibility. Okay. Because one thing I know to be true, and this is not a diss, but especially those in this field and in the STEM field, there could be some communication challenges. There could be some communication challenges. And so we might not be communicating as effectively as we think that we are, right? And so we'll want to make sure that you are doing your part and that you could see what it is that you are saying and what it is that you're agreeing to. And again, we have really good people that are here to help you. We want the best for you, and also understand that these are true professionals, professionals. So just like you as a startup founder, you want to be compensated or rewarded for your work, our professionals want to be compensated for their work as well. All right, so Eric, you created a resource that I consider to be, in a good way, I'm saying this, the cheat code. Okay. And so
Mm-hmm.
that is Handle Your Biz. Can you tell us a little bit more about Handle Your Biz? Where can folks get a copy of this, and how they can follow the journey of Handle Your Biz?
All right. It's basically a guide or roadmap for startups to actually set up their business structure, as I talked about in the beginning. Like I said, it's one of the most important things that you can do, because it's basically, when you do it, you want to have in your mind that you're setting this thing up to protect you from any potential liabilities of the company itself. So you want to create a separation between yourself and the company. And those documents, initial formation documents, do that. And what this book does, it walks you through step by step. It doesn't matter what state you're in, to get all of those documents filed correctly. It tells you where you can go to actually find the documents that you need to file. And then it kind of gives you some extra gems at the end of some things to do after you have your structure in place that will help you to also be successful. So right now you can get a free copy of it. All you have to do is go to my one of my IG pages. This one is Handle Your Business, and it's Handle Your Biznis. If you go there, I want you to follow me there. Click the link in the bio. That link will redirect you to a website where you can put your get on the mailing list, and we'll send you a free electronic copy of this ebook, Handle Your Biz.
Did you just say FREE, Eric?
Yes, it's absolutely free right now. Because again, we're doing all that we can to try to help startups and founders get started properly, get out of the gate, and to give them the best chance to succeed. So we put that together just to do that.
That's phenomenal, folks. So he put it in a book, and something that is, it's not too thick, but it's enough where you have all the necessary information and you can get through it. And I actually read it. And so kudos to Eric. Super excited about that. Maybe we'll have to add that to our Founders and Leaders book club as well, throughout tax season, so that folks know about that. So can you repeat again, where can they get the book?
Okay. So first thing you do is go to Instagram, Handle Your Business. That's Handle Your Biznis. When you get there, follow us and click the link in the bio. It'll redirect you to the website. On the website, you can leave your information, your email, and you'll be able to receive a free copy in your email.
I love it. All right. And then also, Eric, for startups that may be saying, I need Eric on my team. We know that this is tax season. You have some folks a lot of folks, I should say, and a lot of businesses that you are already working with. How can our startups, number one, if they need to start their taxes done, how can they get your services? And then number two, if they want to bring you into their business and say, hey, I need Eric's help throughout the year, how do they do that?
So you accomplish both by simply going to my website at www.smPACCT.com. And once you get there, all my contact information is there. You'll see what services we provide. You'll see how we can help you. There's a little chat box there. So if you got some questions, you can reach out to me and I can respond in real time. And from there, we can talk and we can discuss whatever it is you need, and we'll do our best to help you out.
I love it. So he's a valuable resource. And after tax season, folks, you might see Eric representing Wearable Tech Ventures at a tech event near you, in Alabama or Atlanta. But he's going to need a break after tax season. But in the interim, folks, you have what you need. We have just given you tools to put in your tool belt. It's up to you to sharpen them by using them. Okay. So first of all, what you're going to do today, you're going to share this episode. You're going to share this episode because free game 99 is what this was right here. Number two, you're going to follow Eric at Handle Your Biz and make sure you're doing Handle Your Business at on
Handle your
Instagram.
business.
We'll make sure we put
Mm-hmm.
the specific links, the website links, etc., in the show notes. You want to follow him.
Okay.
Get your free copy of the book. Get your free copy of the book. Is there a limit to when they could get their free copy, Eric?
No, right now I just have it open, and I actually don't plan on closing it. So it's really just to help startups and brand new entrepreneurs kind of direct them in the right direction. So it's
Uh-oh.
out there now. So go out there and get it. We
Take that
may start selling it again, but right now it's free.
take that gift. And especially, for folks that may have been laid off in the tech industry and they're thinking maybe they want to start a startup or start their business. Eric is that resource. So make sure you go and get your copy at Handle Your Business, NIS, and on Instagram. And then number three, you're going to go to his website. You're going to go to Eric's website. You're going to set up a consultation. Understand, number one, Eric already has a portfolio of clients, but he is opening himself up to the wearable tech ecosystem for consultation, as well as to provide some initial service and then determine what a professional relationship with extending those services can be throughout the year. So you can make sure you have your quarterly meetings, so that you can make sure you are tight, so that you can make sure that your foundation is sound and that your soil is fertile, so you can receive the investments, so that you can receive the additional funding and things that you desire to help your business grow. Okay. It is up to you, founders. It is up to you to take advantage of these particular steps. Please don't say, oh, nobody's investing in me, or they said I'm out of order. We told you. We told you on this episode. All right. Any last
Yeah.
words of wisdom to share with our audience, Eric?
Wow. There's a lot that I could say, but just founders always keep one thing that I want to share with you before I go is that you should always keep in mind that when you are raising capital to fund your business, it's never for personal expenses. So you always want to keep that legal separation between your business and yourself. So that means once you've established and you've opened up your bank account, do not make any personal purchases out of that account. If you do, you kind of break that, what they call a corporate veil, and it kind of sets you up to for your personal assets to be affected if anything ever goes on with the company. So yeah, that's kind of like the parting gem that I want you guys to know. So hopefully you guys, I wish everybody one much success. And again, I'm available to help. Just reach out to me at those addresses and those locations that we gave you during the podcast.
I love it. Thank you so much, Eric, for being a valued guest here at Wearable Takeover. This is just the beginning, folks. You will continue to see him, especially after tax season. We so appreciate your partnership and everything you've contributed to our ecosystem. And folks, you know what? We're going to wait to incorporate some of that this or that product knowledge, because we don't want you doing too much extra homework today. We want you to focus on making sure you're contacting Eric and getting the free resources, as well as the consultations with him today. So with that, we are signing off. Did you love this episode? Make sure you give us a high five, a thumbs up, share it, rank it. All right. And thank you so much for making us one of the top, I believe it was the top three tech podcasts of 2022.
Wow.
We were one of the top three Wearable Tech podcasts of 2022. And this is a really major feat, because the number one podcast was Apple. And so here you have our ecosystem as that third one. So thank you for listening. Thank you for sharing, and continue to share, because we have a wealth of knowledge here. So with that, we are signing off.
Right.